Chapter 5, Sole Proprietor. The following forms and publications were used in the research and development of this lesson. Forms and publications are available at www.irs.gov. The student will understand the different accounting periods and accounting methods with a Schedule C sole proprietorship. The student will also be able to explain the difference between an independent contractor and an employee. The student will be able to identify when to use Schedule C Easy or Schedule C. And the student will know when startup costs are an allowable deductible expense. Sole proprietor, simply put, means in business for self. You are in the business and you are the primary person involved in this business. Typical clients that come to you during tax season who are classified sole proprietor are those who have some type of a service industry, whether they are a mechanic or a landscaper or a subcontractor. They provide all their own equipment and their own supplies, and then they are paid a bulk amount of money to do the business, and income and expenses are all reported as a sole proprietor. It means one. There is an instance where both husband and wife can be sole proprietors under a qualified joint venture. I have several clients like this where they both work the business, perhaps a small restaurant, and they don't incorporate. It is still considered a sole proprietor. However, for each one to get their fair share of Social Security and Medicare benefits later on, 2 Schedule Cs must be filed. We look at accounting periods and methods. Calendar year and fiscal year. Normally, Schedule C sole proprietor are calendar year, January through December of each year. There are instances where it could be different. A good example is a school. A lot of times, small schools that are sole proprietor aren't incorporated. The fiscal year begins in September and runs through the next year, August. And that helps them to track better expenses related to each specific year of school. The variety of methods are called cash method and accrual method. A cash method is when you receive the money, that is income. When you spend, that is the expense. It's just when you actually do the transaction. An accrual method and an advantage is to, for instance, roofers are able to determine the total cost of any particular job because using the accrual method, no matter when it was spent or received, takes the total income and expense of each specific job to determine the profitability of each job. There is a big discussion and a large issue per state on the difference between an independent contractor and an employee. It's understandable that most businesses, especially sole proprietors, would prefer the independent contractor method. As an independent contractor, you are not responsible for paying payroll taxes. The person is, the individual, the sole proprietor is responsible for reporting and paying Social Security and Medicare taxes. You don't have to pay your share of the Social Security and Medicare tax if you can count them as an independent contractor. It's obviously there is state law that dictates when a person is an independent contractor versus an employee. It is, like I said, to the advantage of the employer to classify everybody as an independent contractor. But the states consider someone an employee based on the range of overview and responsibility. A good example is a painter. You hire a painter to paint your office. Now, you may not wish them to come in during company hours and when the office is open. You can regulate that, and you certainly want to regulate what color is painted. But the independent contractor painter will supply all his own supplies, paint brushes, ladders, any additional drop cloths, whatever they need, and essentially they have the span of control over the job. It is more considered an employee when the span of control is in the hands of the employer. It's a good example, tax preparers. During tax season, you could say a tax preparer is, I have my own contracting license, I have my own certification, therefore I could be an independent contractor. But the span of control is greater for the owner when they can regulate when you work, place you into a schedule, tell you how they want it done. That's what is meant by the span of control. And there are very specific guidelines and rules and regulations in each state to determine correctly identifying someone as an independent contractor or an employee. Schedule CEZ is, in most cases, certainly a smaller form, and most tax preparers charge a smaller amount of money. But it's limited. Expenses must be $5,000 or less. You don't have to detail out the expenses, but it's always good to keep accurate records of detailed expenses. There is no inventory involved, and you must use the cash method. You have no employees. There's no business use of your home. You cannot have a loss, and you can only have one business. Otherwise, it is a Schedule C. Now, the whole point of being self-employed is you receive monies for work performed, but that money, and what is a challenge for you as a tax preparer, is working and advising your clients about that. You receive gross monies. And all of us who are W-2 employees receive net monies after payroll taxes are deducted. But the difficulty is many people, when they receive the money, look at it in the same light. So it's very important to stress to your sole proprietor clients that that gross money, you can't spend it all because you have to pay taxes on it, and the taxes are not taken out. As a matter of fact, as a sole proprietor, you will pay employer and the employee portion. We know that the total amount of payroll taxes, Social Security and Medicare, is 15.2%. 15.3%. As W-2 employees, the employer pays half of that and the employee pays the other half. But when you're self-employed, you pay the full 15.3%. Now, if your net earnings are under $400, you are not subject to the tax. You must report that on Schedule SE. And a taxpayer does get an adjustment since it doesn't, and it isn't quite fair that you have to pay all the tax and W-2 employees don't. You at least are able to take an adjustment of half of the self-employment tax on the adjustments to income portion of the front page of the Form 1040. Now here's a listing on Schedule C of all the different categories of expenses. What happens many times is you have clients that are self-employed, have their own business, but they come in and sit down at your desk with nothing in hand. And they look up at the ceiling when you're asking for these expenses and they're guesstimating. Well, I spent about $1,000 on advertising. Well, I put about 4,000 miles on my truck this year. Very important to advise your clients that you need to have accurate records to be able to report correctly at the expenses under the right category, what the IRS looks at, and they compare your expenses sheet to everybody else under the same business classification. So my advice is to give your clients a form. We have a business income/expense sheet and have them complete that. Go home, total it up to put an exact dollar figure under each category, just as it shows here on the screen with the categories. But these are the standard categories. Yes, you can have expenses that are greater than the amount of income. I also advise my clients, if that's the case, after generally 2 to 3 years, the IRS may choose to not include your expenses because it must be a hobby at that point, since you're never making money. A lot of it depends on the situations. You may encounter clients who consistently have a loss, but with children, with other expenses, and no other source of income, you can ask them, do you see the opportunity for the IRS to audit your account when you are continually showing a loss in your business and no other form of income? Some of the challenges of being a tax preparer. Health insurance and retirement plans are expenses for even self-employed people, but it's not considered an expense of the business. You would include any health insurance premiums that may qualify. You would include it as an adjustment of income on Form 1040. Because just like W-2 employees, your Social Security and Medicare tax is based on your full amount, your gross income, and not just the taxable portion of your income. So there are lines under adjustments to income, and we will look at that in more detail in a later chapter, for health insurance premiums and retirement plan contributions. Cost of goods sold. You don't normally run across this too often, but I have clients who are Avon salespeople, I should say, and they would have cost of goods sold. This means they have inventory. They purchase product from Avon. I've seen this also with Amway and other direct sales companies. So the client, the sole proprietor, purchases the goods at wholesale and then, of course, turn around and sell it for retail, making a profit. The idea here, though, is then there is inventory to carry on from one year to the next. That's where you would utilize cost of goods sold. Line 35, you would use the information from the previous year's line 41 in inventory at the end of year. Then, of course, you would subtract purchases that were less cost of items withdrawn for personal use. Maybe there's some labor. Perhaps you have someone that's taking your bottles, your empty plastic bottles, and placing labels around it, filling the bottle with the bulk product for resale. Perhaps you do have materials and supplies. All these costs are strictly the costs in getting your product ready for retail sale. Then you would, of course, subtract from the inventory at the end of the year to arrive at costs of goods sold that reduces your income. Another form very important to stress to your clients, because many times they don't realize they have this opportunity. So when you have someone that is self-employed, even to a landscaper or a contractor, you may ask them, do you have an office that you go to? No, we have no office. I just work out of my home. Do you have an exclusive room for business? No. Well, then they may not be able to use this. The key is line 1 there saying area used regularly and exclusively for business. So if they do have the opportunity, they have no office to go to, or in some cases, they, for instance, life insurance salesman working for a company that has no office within a 50-mile radius of your home. Therefore, you're able to allow and use a singular room, but it must be used exclusively for business. It can't also be your child's room or a den. It strictly must be exclusively and regularly used for your business. Then that's wonderful because you determine based on the total area of the home divided by the area used regularly exclusively to come up with a percentage that you may be able to use indirect expenses. Indirect expenses are, for instance, you replace the roof. If your percentage of business use of the home is 10%, then again you can deduct 10% of the cost of replacing the roof as a business expense. 10% of the cost of repainting your home, 10% of your utilities, 10% of your mortgage interest or your rent payment. You could also have direct expenses. Now, these are expenses that are only used for the actual room itself. Perhaps you paint the room, or perhaps you replace the carpet, or purchase furniture. Anything that's strictly a direct expense to the room where you use for business exclusively and regularly. This Form 8829 is not allowed to be used if your business is incurring a loss that year. Now, selling business property. Most gains and losses from the sale, exchange, or conversion of business property are reported on Form 4797, Sale of Business Property. The gain or loss is computed by subtracting the basis of the asset from the sales price. How much you originally bought for it, paid for it, and what you eventually sold it for. And the difference is either a gain or a loss. It also does depend on which IRS code section applies to the asset. I encourage you to look in and make more detailed research to determine the proper section for the business that you sold. This covers in general anything to do with sole proprietorship. Do Chapter 5 review questions and the TPAs online, and read Chapter 6. Thank you.